Ladies and gentlemen, good day and welcome to Adani Ports and SEZ Limited Q1FY24 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Kumar from ICICI Securities. Thank you, and over to you, sir.
Thank you, Aman. Good evening, and welcome you all to the Q1FY24 earnings conference call for Adani Ports and SEZ. Today, we have with us Mr. Karan Adani, CEO and whole-time director, Mr. Subhata Tripathi, CEO of the Ports Business, Mr. Sushant Kumar Mishra, CEO, Adani Logistics, Mr. D. Muthukumaran, CFO of Adani Ports, and Mr. Charanjit Singh, Head of Investor Relations and ESG. We'll start with a brief opening remarks by the management team, post which we'll open it up for Q&A. Without much delay, I would hand over the call to Mr. Charanjit Singh. Over to you, sir.
Thank you, Mohit, and good evening, everyone, and a warm welcome, and thanks for taking out the time to join our call. Our template for the call will be like the previous calls. We'll start with the remarks from the CEO, and then we'll directly go into Q&A. Please keep in mind that for any group-related questions or any other company, you can reach out to me directly after this call. And on the call, the focus will be entirely on APSEZ. So without taking much time, I'll request Mr. Karan Adani to provide the highlights for Q1 FY24. Over to you, Mr. Adani.
Thank you, Charanjit. Good evening, everybody, and welcome to the Q1 FY24 conference call to discuss the operational and financial performance of APSEZ. I am pleased to announce that APSEZ has delivered its strongest ever quarterly operating performance in Q1 of FY24. With record quarterly cargo volumes, revenue and EBITDA and PAT, despite our operationals being adversely impacted for around 6 days due to Cyclone Biparjoy at 3 of our ports in Gujarat. That represents over 50% of APSEZ's cargo handling capacity. Starting with financials, APSEZ delivered a record quarterly operating revenue of rupees 6,248 crores, implying 24% year-on-year growth. EBITDA, including forex impact, was at rupees 3,765 crores, implying 80% year-on-year growth on like-to-like basis. EBITDA, excluding forex impact, was at rupees 3,754 crores, implying 14% year-on-year growth on like-to-like basis. The port's EBITDA margin for the quarter is 72%, reflecting 150 basis points year-on-year increase. The EBITDA margin of logistics business also observed 150 basis points increase to jump to 28%. This is higher than the listed peers in India. The profit after tax for the quarter increased by 80% year-on-year to rupees 2,119 crores. Moving to operational highlights, starting with our ports business, we achieved a record cargo throughput of 101.4 million metric ton, reflecting a 12% year-on-year growth. Within India, our cargo volumes grew by 8%, which is around 3 times the country's cargo growth rate for the quarter. The robust growth has resulted in APSEZ's market share increasing by 200 basis points to 26% during the quarter. Mundra continues to be the largest container handling port of India with 1.72 million TEUs managed during the quarter. This is 12% higher than its closest competitor. 3 of our ports, Krishnapatnam, Dhamra and Tuna, recorded their highest ever quarterly volumes during this quarter. Our newly acquired assets, Haifa Port and Karaikal Port, have ramped up well with monthly cargo volumes now touching 1 million metric ton mark at both these ports. Our flagship port, Mundra, cognizant of the growing container cargo demand, is adding capacity in advance. A new berth, T3, with a capacity of 0.8 million TEUs, is set to be commissioned in Q3 of the current financial year. To augment container rail handling capacity, 5 new lines are being added that will increase the cargo handling capacity by over 30%. During the current financial year, we are also targeting the commissioning of India's largest transshipment port at Vizhinjam. Moving to operational performance of logistics business, our overall rail volumes recorded a healthy growth of 18% year-on-year to 1,31,420 TEUs. The bulk cargo transported also increased by a strong 40% year-on-year to 4.35 million metric ton. To enable our logistics business growth, we are adding more trains. During the quarter, 2 trains were added, taking the total count of trains to 95. This includes 43 container trains and 42 bulk trains. Orders are already placed for another 13 bulk trains and 24 container trains. Alongside, we continue to increase the count of multimodal logistics park. By the end of the current financial year, we are targeting for MMLP count of 12, with the commissioning of ICD in Virochan Nagar, Loni, and Valwada. Finally, the guidance of FY24. With cargo volume of 100 plus million metric ton in Q1, we are confident of meeting our cargo volume and financial guidance for FY24 provided in May at the time of full year results. We can now open the forum for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Good evening. Thanks for the opportunity. It's good to see a strong quarterly performance by Adani Ports. My first question is, in FY22 end, your warehousing capacity was 0.8 million square feet. And so far till Q1 FY24, you are at about 1.6 million square feet. How will the ramp up to 60 million square feet be phased out, and what will be the associated capex?
So we have roughly, as of right now, 5 million square feet under construction. We would be looking to add roughly 10 million square feet every year in order to reach that target.
And what will be the associated capex roughly?
So for this year's guidance, capex guidance already takes into account the 5 million square feet. And for next year, we would for the remaining, we would look at roughly 1,800 rupees per square feet as a ballpark, 1,800 to 2,000 rupees per square feet as a ballpark figure to compute the capex.
Got it. My second question is also on logistics. Could you help disaggregate the logistics rail volumes of 131,420 TEUs into EXIM and domestic? And basically, what has been the year-on-year volume growth in each? Is the EXIM imbalance situation, expected to improve for rail container business in the balance fiscal?
So roughly 90% of our volume is EXIM, 10% is domestic. And we mainly run Mundra and North, so Patli and Kila Raipur as the circuits. and we have a very balanced route right now. We don't see any imbalance as an issue. In essence, we have actually seen more efficiency coming in with the double stack counts increasing, and especially with the DFC getting commissioned, we have seen the efficiency factors improving significantly.
Okay. So the volume growth of high teens or 20% that we see is showing up in your EXIM volume growth mainly. That would be right to conclude.
Yes, that's right.
So you're clearly gaining market share in your Mundra to North India route as of now, because your competitors don't seem to be showing similar growth in EXIM. Is that right to conclude?
That's right to conclude.
Sure. Yeah. Thank you, and I wish you all the best.
Thank you.
Thank you. The next question is from the line of Abhiram Iyer from Deutsche Bank. Please go ahead.
Hi, thanks for taking my question and congrats on a fantastic set of results. My question is basically a bit, operational, but can you provide what the debt and cash numbers were at the end of the quarter?
So the total gross debt is 48,800 crores and cash is 9,800 crores. So total net debt is about 39,000 crores.
40,800 and 9,800, right? And does the gross debt...
8,800.
Sorry, the gross debt is 48,000 crores and cash is 9,900 crores. So yeah, gross debt is around 39,000 crores.
Understood. And this gross debt is inclusive of the short-term debt as well. So effectively, we've seen a sequential drop, small drop.
Yeah, absolutely next to nothing short-term debt, but it includes.
Got it. Thanks. I'll get back to you.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, good evening. Thank you for the opportunity. The first question I had was we have touched 100 million tons plus in this quarter, and I see that we are still maintaining 370 to 390 guidance. Can you help us understand, are you expecting any decline from here on, or we being a bit more extra conservative out here? Any particular cargo or a port where you see a pressure on the volumes?
So far we have not seen any pressures in the volume. You would have seen the July number also reflects the similar sort of growth that we are continuing. So we don't foresee any slowdown as of right now.
So in that case, Karan, how do we explain 370 to 390? If I simply analyze 100 million, it crosses actually 400 million mark for FY24.
Achal, we can't be changing the guidance on a quarterly basis, right? Some plus, some minuses can happen, right? So we continue to grow, so we are optimistic. At the right point in time, we might like to change the guidance, but not at this point in time.
Understood. Second question I had, if you look at Krishnapatnam, the margins have improved fairly significantly. So can you help us understand the measures which are driving this margin improvement and the sustainability of this? Is there any one-off in any of the other ports as well where the particular cargo or a particular receipt is helping boosting the margins?
No, there is no one-off in any of the port items at any places. It is a clear reflection of the volumes which you see. So the port has recorded the highest ever quarterly volumes, and that's the reason for improved margins.
Understood. If I may ask, the impact of the cyclone, you said 6 days kind of impacted our capacity. So is there any way to estimate what is the impact in terms of revenue loss or the margin?
We lost 2 million tons of handling volume because of the cyclone.
And would that be covered in this quarter or not really? That's gone for good.
Sorry, covered meaning?
Effectively that gets pushed in the following days and the quarter. So will this be covered in or compensated in the second quarter volume?
I mean, directionally, yes, but accurate number prediction will be difficult. But directionally, yes, because some volume of cargo that actually didn't show up may show up in the next quarter, July.
Got it. Thank you. I'll fall back in the queue. Thank you.
Thank you. The next question is from the line of Parash Jain from HSBC. Please go ahead.
Yeah. Thank you. Hey, Karan. I have two questions. First, can you talk a bit about how has been onboarding of Haifa been to your portfolio? And probably after initial seeding issue, what sort of margin shall we model as we exit from this financial year on a steady state basis? And secondly, with Vizhinjam coming to an end by the end of this year, any timeline for the Colombo port and both of those ports combining together? Will you be looking to divest stake at the terminal level to any of your anchor customers? Or how would be the strategy to gain a sizable transshipment volume from the get-go?
So thanks, Parash. On the Colombo, we expect phase 1 of Colombo to be commissioned by December of 2024. As you know, we already have partners over there. We have John Keells and Sri Lankan Port Authority as partners. So we don't look at so we are not looking at divestment of any equity over there. We do expect that there is enough volume over there in order to fill up the terminal. In terms of Vizhinjam, we have our first lot of cranes coming in October of this year, and we expect commissioning to be done by March of 24. We expect phase 1 to be commissioned. We have even over there, as of right now, we are not looking to divest any equity. We have enough interest from shipping lines to make this as a hub. And we are looking at being more on cost competitive in that region. That is how we are looking at it. In terms of Haifa, the onboarding has been good. We are still going through some of the integration. We have appointed a new CEO over there. And we have also changed the board. We are right now in the midst of negotiation with the unions to reduce some of the manpower over there to go through the VRS scheme. As you know that 80% of the cost over there, operating cost, is manpower cost, and that is reflecting in the EBITDA margin. Once we are confident that we will be able to settle with the union by December of this year. Once done, we will see good growth. I mean, improvement in the margins from then onwards. In terms of volume, we are very happy with the volume growth. We are clocking 1 million ton per month in Haifa, and we have gained some of the cargo which we had lost, which the port had lost when they were doing the divestment. So we are very confident that by end of this financial year, we would be clocking around anything between 12 to 14 million tons of cargo in Haifa.
And your steady-state margin probably will be, or is there any numbers in mind?
It's hard to give you exactly what will be the margins, because it will all depend on how much what we are able to negotiate with the unions. I think we will be able to give you an accurate number in December in terms of what will be ongoing margins over there.
Lovely. Thank you, and have a wonderful evening.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Adani from Arkan Capital. Please go ahead.
Yeah, hi, good evening. Congrats on a very strong set of numbers. Just had a question, I guess, more from a fixed income perspective. I think when the company had reported earnings last or towards the end of the fiscal 23, You've done a partial tender for the
Can you
Adani
speak up?
ports.
Your voice is not coming clearly. Sorry about that.
Hi, sorry, can you hear me now?
Yes, better.
Yeah, hi. Congrats on a strong set of numbers. I guess just a question from a fixed income perspective. The company had announced a tender for the Adani Ports 24s, I think back in April. And the messaging then was that they would continue to do so every 3 months, I guess, leading up to the maturity next July. So is that still part of the plans? Because I guess we've gone through July 23 without any incremental announcements.
Yeah. So our plan, as you know, that our plan, which we have communicated to all the investors, is that by March of 24, we want to have our net debt to EBITDA at around 2.5x. As part of it, we would look at strategically when to come out and do the repayments of the June bonds as well. So that is still on cards. I think the timing of it, we will keep it open in terms of to look at it opportunistically when would be the right time to do it.
Understood. Okay, great. Thank you very much.
Thank you. The next question is from the line of Asmita Sidhu from MetLife Investment Management. Please go ahead.
Hi, thank you, management, and congrats on your results. I just have a quick question actually regarding your ESG goals. So I noticed on slide 34 that your current renewable energy share is at 14% versus your 2025 target of 100%. Could we just get an idea how the ramp up will go from 14% to 100% in the next 18 months? Thank you.
Sure. So we are currently in implementation of 250 megawatts of renewable energy, which we expect to be commissioned by April of 2024. So we do expect with 250 megawatts we would be reaching roughly 90% of the renewable shares.
That's great. Thank you very much and have a good evening.
Thank you. The next question is from the line of Atul Tiwari from Citi. Please go ahead.
Yes, sir. Just a question on the rail logistics business.
Atul, your voice is not clear. Can you please use the handset?
Just a second. Yeah. Is it better now?
Yes. Go ahead, please.
Yeah. So, sir, just a question on the container logistics business. So obviously we have seen very strong growth. So on the EXIM side, what would be your current market share? Would you have some data on that?
Sorry, can you repeat that question?
So, sir, basically for the container logistics on the EXIM side, what would be your current market share?
Current market share from a port perspective or overall EXIM volume?
In terms of the overall EXIM volume, I mean the number of containers that you have handled on your rail versus the total industry.
So to be honest, Atul, we don't track on the pan-India basis because we, as you know, that most of our circuits that we run are Mundra to North India right now, as of right now, and from Tumb to JNPT or Tumb to Hazira. I can tell you that from Mundra perspective, ALL's market share from all the rail volume moving out of Mundra is roughly at around 13 to 14%. And but for a pan-India basis, let me come back to you, and we can the team can give you offline that number.
Okay, and obviously you mentioned that 24 trains you have ordered on the container side. So it looks like that you continue to expect pretty strong growth on that side of the business over the next 2 to 3 years. So what kind of volume growth should we pencil in?
So we would look at similar growth that what we have been achieving in the last 3 years. If you've seen in the last 3 years, we've been consistently growing at anything between 20 to 25%. So we are very confident of achieving those, continuing with that sort of target. As you know that we are we have commissioned the ICD in Nagpur. So that will be a completely new area for us where we will be gaining market share. We would be starting by by March of next year, we would be starting our ICD in Ahmedabad. So that will be again a new market share that we'll be taking. So what we have planned is the rakes coming in with the assets that we are adding and getting commission. And with that, we are very confident that 20 to 25% growth in rail volume will continue.
Great, sir. Thanks a lot. Thanks, sir.
Thank you. The next question is from the line of Vishal from Silverdale. Please go ahead.
Hey, thanks, and good evening, Karan. Just one question. I think on the cash level, what I heard was that the cash at the end of the quarter was about 9,000 crores. But if I look at the covenant calculation on the last page of your financial statements, the cash mentioned is about 3,700 crores. So could you be able to reconcile what's the difference in those two numbers? That's one. And second, how much of this cash is restricted versus unrestricted? And how much of the cash is at the Haifa port? That would be useful. Thank you.
See, the difference between the 9,800 crores that we told you versus what you see in the annexure is consolidated versus standalone. The one in the annexure is standalone, which is the requirement under the LODR to actually separately file the covenants against the NCDs still outstanding. So that is it. Yeah. And under all the cash is actually unrestricted.
Thank
Hello?
you. Yeah, Vishal, is the question answered?
Yes.
Thanks.
Yes. No.
So your voice is breaking, Vishal. We couldn't hear you. Thank you.
Said yes.
Yes. We'll move to the next question. That is from the line of Abhiram Iyer from Deutsche Bank. Please go ahead.
Hi, thanks for the follow-up opportunity. My question is a bit medium term. Has there been any talks conducted with the Gujarat Maritime Board on extending Mundra Port's concession? There were a few news reports last year, but been no updates beyond that. Or is it too early to sort of think about that at the moment from the company's perspective?
No, so as we have been mentioning, we are in touch with Gujarat government to come out with a policy. It's not just Mundra Port, but all the minor ports or all the private ports which are operated in the state of Gujarat. The government is formulating a policy. We are hopeful that we should be able to hear something soon. But as of right now, there is no new update to give on that front.
Got it. And does the company have any expectations on when this might be? This year, next year? With the elections coming up, obviously that might take a back seat. But any expectations from the company?
As long as we get clarity, that's more than important.
Fair enough. Thank you.
Thank you. The next question is from the line of Pulkit from Goldman Sachs. Please go ahead.
Yeah, thank you for taking my questions. I have two questions. First is, as part of your annual report, in the 3 pillars of growth, you talk about, building port interests outside of India, and this is through acquisitions. Could you highlight what are the key things that we look for when we are looking at, these ports outside India, given that we already have 2 assets under either construction or operations for us? So that is my question number 1.
I think what we look for outside India, obviously, first is basic is the returns have to be same as India, if not more. Second, we look at what kind of partners we are getting. If we are getting a good partner, then only we would be entering. As you have seen in the last 2 investments, we have local partners over there. The third is we would obviously look at what is the size of the market share that we can get by investing in that region. And unless it's not a significant market share, that won't be of interest. You can see in Haifa itself, 50% of country's volume moves through Haifa port. So that is a significant presence that we can have. And obviously, the last one is how it can benefit by having a position from our existing. How can it value add into our existing portfolio? This is more of a longer term longer strategic direction, not a short term or a medium term.
Field we would do.
Sorry?
It will be only an operational port, or we could look at doing greenfield ports also outside of India?
It will be operational ports, and it would be, even if it is greenfield, it would be more like a terminal, like what we have done in what we are doing in Colombo, which is more in a controlled environment. We wouldn't be doing a full-fledged greenfield port in outside India.
Second question is, while Charanjit did highlight that you don't want to be coming in the first quarter and changing your guidance, but is it also because of the fact that we are seeing these export bans for food products from India, as well as some of the global shipping lines have issued profit warnings or volume warnings? Is that something that is also factored in, which is why despite doing such great volumes in the first 4 months, you're holding back on increasing your guidance?
Not really. We are bullish on India. We are bullish on the trade. As you know that we are multi-commodity, so we, as part of our de-risking, we don't rely only on container or only on coal. And that is the strength of the group and of the company, that if we are seeing a slowdown in one part, we are able to ramp up quickly on the other part of the cargo segment. And also with geographical diversification, we are also de-risking from just one particular one particular pockets of the country. So I think it's just it's nothing to do with that we are cautious, but I think it's, as Charanjit said, that it would be not prudent to change right now, and maybe in October we would be able to give a better guidance if we have to change.
Got it. Thank you for those answers.
Thank you. The next question is from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead.
Thanks. Thank you for the opportunity and congrats on a good set of numbers, sir. So I have just one question. So the realizations for Q1 are down on a YOY and on QOQ basis. Is it purely because of the mix? And have we taken the price hikes for the year?
Yeah, hi. You're right. Actually, it's about a couple of percentage reduction, but it's by and large because of the mix. But the important number to note is actually the port EBITDA, which actually is at 72%. And also in absolute terms, the EBITDA has grown as well. So it's you're absolutely right. It is mixed.
Okay. And so have we taken the price hikes for FY24?
Yes, we have taken.
And we will see the full effect of price hike from July onwards.
So if you can quantify the price hike, blended.
Yeah, so as you know that we keep guiding, it's around 2.5% of our total per ton revenue.
Okay. Okay, sir. Thank you. That's all from me.
Thank you. The next question is from the line of Nikhil Ningania from Alliance Bernstein. Please go ahead.
Hi. Thank you for taking my question. I just have one question. So good to see strong set of numbers in the first quarter on volumes. But just on a longer guidance on 500 million tons in FY25, now that most of the inorganic growth seems behind, Krishnapatnam, Gangavaram, Karaikal, Haifa, apart from Vizhinjam, what else is maybe under evaluation or something in mind to help us get close to that guidance of 500 million ton next fiscal?
No, 500 million ton is predominantly from our existing assets. And obviously it also takes into account Colombo as well as Vizhinjam coming online fully, which itself would add roughly, if I'm not wrong, 25 to 30 million tons of volume additionally. But this is predominantly from our existing portfolio and existing assets.
Understood. So
also, what is more important is that we would still hit our revenue and EBITDA targets, even if we are a little bit short of the 500 in case if we do. But we will still achieve the guidance of revenue and EBITDA.
Got it. Thank you. Just one follow-up to that. So on the inorganic front, is the company finding it a bit challenging now to use that lever, given there aren't too many opportunities left in India per se?
No, so there are, as you know, that lot of between FY28 and FY30, lot of concessions will come up for renewal. So that will give us another opportunity of growth. But otherwise we would look at expanding our existing portfolio, and we would look at increasing our portfolio as a transport utility over there.
Understood. That's very good. Thank you.
Thank you. The next question is from the line of Ashar Lohade from JM Financial. Please go ahead.
Yeah, thank you for the follow-up. Just wanted to clarify with respect to your capex, guidance. Is there anything new which is built in the capex, or it's the same capital allocation what you had talked about in terms of ports earlier in the overall capex number of 4,500 crores?
No, so right now there is no change in our capex guidance. We are still well within our guided range of 4,500 to 5,000. There is no change on that.
Understood.
And any revised right now.
Got it. And any update on the Dighi port, where we are? What is the plan here from next 3 to 5 year perspective?
Yeah, so as you know that we are working on the railway line to connect. We've got the approval from the Maharashtra government. And the land acquisition is underway right now. We are also developing a lot of work to be done in terms of rejuvenating the existing jetties and the backup area. So we are working on that. The road connectivity, which was also an issue, we've used this year to finish that. Got 4-lane road connectivity all the way to the port, and we are confident that. We will be able to create an alternate to JNPT at Dighi.
Is there any capex guidance you can indicate for next 3 to 4 years at Dighi port at that port?
It'll be hard to give you a port by port guidance. I think what we give as an overall guidance that includes all of these things.
Understood. And just one clarification with respect to in the PPT, you have talked about the Marina Flotilla. Is that the harbor business? Because we are the number in terms of the increase in the equipments is substantial increase. So just any color you can provide in that?
Yeah, so that is the tug business, that is the Ocean Sparkle business and the harbor business. That's right. That is part of that predominant increase is because of Ocean Sparkle acquisition, which we did last year.
Got it. Thank you. That's all from my mind. Thank you.
Thank you. Anyone who wishes to ask a question at this time, they may please press star and 1. The next question is from the line of Union Bai from Bearings. Please go ahead.
Oh, hi. I have 2 quick questions.
Sorry, Union, you're not audible clearly. Can I request you to use the handset closer to your mic?
Can you hear me now? Is that better?
Much better, thank you.
Okay, great. I have 2 quick questions. One is about your secured debt. I think at the year end, if I remember correctly, you have about 20% of the secured debt, and you said you're going to repay them over time in financial year 24. Can you give us an update on this?
Can you repeat the question? I didn't quite catch the question. You're asking for secured debt?
Yeah.
No, none of our bonds are secured. They're all unsecured. The only secured debt we have is actually the domestic bonds, which is actually debentures, which is also waning, which is today at 6,000 crores, round number, approximate number.
6,000 crores.
6,000 crores.
Okay.
At the end of the year.
Okay, thank you. And also, how about share pledge? I think at year end, the share pledge is still about 4.5%. What is the level now?
So this share pledge actually is secondary collateral for operating assets. There are no loans outstanding. So therefore, actually, and all these share pledges, you're asking about promoter level share pledge, right?
I'm asking about the promoter share pledge.
Yeah. So that's actually a secondary, and there are no loan outstanding at the promoter level as we speak.
Okay. Thanks for the update.
Thank you. The next question is on the line of Aditya Mongia from Kotak Securities. Please go ahead.
Thank you for the opportunity and congratulations for a very strong set of results. My question linked to Concor. The question was, with every year of deferment of privatization and you kind of scaling up your own business, does the attractiveness of Concor for you come down over time?
It's directionally yes, but we'll keep evaluating it.
Understood. And also wanted to get the importance of this asset. So let's say any early signs of FY25 in terms of, let's say, your own capex and the ability to give a fairly decent bid for Concor if it were to happen?
Sorry, can you repeat that?
What I'm suggesting is that in case in FY25 the privatization were to happen, do we believe that given our own kind of criteria of where we want to have leverage and what kind of capex we'd be having, we would be able to give it a decent shot?
Yeah, we would find a way to do it.
If the asset is interesting, we'll find a financing solution. But the broad leverage level of the long term is what we have given you the guidance. So.
Understood. And just a second question, anything specific that you would want to share about, let's say, recent news flows on Tanzania and Adani Ports acquiring assets over there?
So Tanzania, we are currently doing operating and maintenance. So anything else, we will actually update you at an appropriate point in time.
Right now, there's nothing else to update. Right now, we're just doing O&M. At an appropriate time, we would, if there is anything. Yeah.
And just lastly, 1,000, or let's say 1 billion tons by 2030 is a more longer-term target that you've spoken about. As you become the largest port operator over time, how much do you envisage would be the share of overseas within that?
Roughly not more than 10 to 15%.
Understood and very clear. Thank you. Those were my questions.
Thank you.
Thank you. A reminder to participants, please press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference back to the management for their closing remarks. Thank you, and over to you.
So thank you very much for joining the call. Looking forward to have you again back on the call in the month of October when we will give our half-yearly results. Thank you and good day.
Thank you very much. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.